Are you interested in learning about the future of renewable energy? Look no further. In this video, we'll discuss the latest advancements in renewable energy technology, including solar and wind power. We'll also explore how these technologies are being used to power homes and businesses around the world and how they're changing the way we think about energy consumption. If you're curious about the future of clean energy, this video is for you. So sit back, relax, and let's dive into the world of renewable energy. But before anything else, make sure that you're subscribed to our channel. And by the end of this video, please do give it a big thumbs up. With that said, let's get the video started. So there's been a lot of talk lately about Tesla stock and where it's headed. Some people are saying it's going to plummet down to $69, while others think it might break $100 again, as it did back in January. What's going on here? Well, one theory is that Elon Musk has been selling Tesla shares all year to fund his purchase of Twitter, and that SpaceX might also be for sale. If this is true, then the stock may continue to go lower if they're pushing out a manned trip to the moon, which is what the rocket launch was all about. But is this the case? Some analysts are skeptical. For one thing, Twitter was recently marked down from $44 billion to $20 billion, and Elon Musk is not a very liquid person. He used to be able to get whatever lines of credit he wanted, but now he has all these banks on the hook for debt that he can't service based on Twitter's business. However, Twitter is breaking even, and Elon expects it to become profitable very soon. So what does all this mean for Tesla stock? Some people are speculating that Elon might be entering the endgame as CEO of all these companies. He's leveraged, and now that the stock is broken, it might be time for him to start thinking about his exit strategy. However, others believe that Tesla is still ahead of the curve in terms of AI chips and battery development. They might have to start licensing this technology to some of their competitors, but that could be another big opportunity for them. Ultimately, the fundamentals of Tesla have shifted, and while no one has downgraded the stock yet, it's possible that this could happen in the coming months. For now, it's important to keep an eye on the stock and see where it goes from here. Back in January, someone had made a statement about Tesla's stock price, saying it would reach $180 in a few months and encouraging people to buy. However, now they're saying to hold on and not buy anymore. The price target has been increased to $185, but the downgrade is still considered weak. Despite this, there have been some concerns about the future of Tesla, particularly with Elon Musk's leadership. Although they're not explicitly pivoting, the company is focused on growth at all costs, even if it means cutting prices to keep up with the demand. However, there are some fundamental issues with the company's pricing and margins that people seem to be overlooking. Analysts and investors alike are starting to question the sustainability of Tesla's success. One particular person, Gary Black, who used to be a huge Tesla supporter, has lowered his earnings, margin, and delivery estimates for the company. Inventory is going up, while backlogs are coming down, which isn't a good sign. Furthermore, the competition in China is becoming more intense, and there are concerns about liquidity and demand for Tesla's cars. The inventory for the Model Y, which is Tesla's best-selling car, is falling off a cliff in the US. Meanwhile, Ford has about 6.5 times more used cars on dealer lots than Tesla. As a long-term investor, all of this is just noise to me. What matters is product freshness. Elon Musk might believe that Tesla's EVs are becoming commodities, but that's a dangerous mindset to have. Once a product becomes commoditized, you lose your pricing premium, which is not a good thing. Even Ford, which is considered a traditional automaker, has some advantages over Tesla when it comes to used car sales. In short, there are some warning signs that investors should pay attention to, but it's important to keep things in perspective and not get caught up in the noise. There's a lot of talk about Ford and Tesla and how they're doing in the auto industry. Some people are saying that Ford is in trouble because last year they lost a lot of money when they sold electric vehicles, but others are saying that the CEO of Ford might be right in the long run, even though Tesla seems to be doing better right now. One person in the conversation, Rebecca, thinks that Tesla is special and shouldn't be compared to other car companies. She thinks that what's going to drive demand for cars in the future is a bit uncertain because people are spending a lot on credit cards and taking on more debt. This could mean that consumers might start cutting back on their spending, which would be bad news for companies like Ford and Tesla. Another person mentions that a bank called First Republic recently went under, which is causing some concern about the economy. But they also say that it's not Elon Musk's fault, even though people might be blaming him for things happening in the market. Finally, someone else thinks that Tesla might be in trouble because they've already sold a lot of cars and might not have as much demand in the future. They also mentioned that Tesla can't make the car they want for the $35,000 mark, which means it might not be a good investment for people who want to buy an electric vehicle. Overall, it seems like people have mixed opinions about Tesla and the auto industry. But one thing's for sure, things are changing fast, and it's hard to predict what will happen next. In one video clip, Tim was talking about Tesla in 2019 and how short-sighted it was to think that the company had a long-term demand problem. Tim argued that if you zoom out and look at the bigger picture, you'd see that Tesla was doing great in the long run. It was leading the charge with its electric vehicles, which were the least expensive on the market. If Tesla delivers on its promises and produces and sells 19 million vehicles by 2030, it would be a huge success. Wall Street would be impressed, and the stock would soar. Recently, Elon Musk announced that he would be selling some of his Tesla stock to fund his space ventures. While this news may be concerning to some investors, it's important to note that this decision should not have a significant impact on the overall success of the company. It's worth remembering that Elon Musk has made similar decisions in the past, such as when he sold PayPal to focus on SpaceX and Tesla. Despite these moves, both companies have continued to grow and thrive. Furthermore, Tesla has a strong leadership team and a robust business strategy in place. The company has a strong brand and a loyal customer base, and is continually innovating and expanding its product offerings. These factors should continue to drive the company's success, even if Elon Musk sells some of his shares. Of course, there may be short-sighted investors who react negatively to the news, but it's important to remember that such investors may not be taking a long-term view of the company's prospects. As with any investment decision, it's important to consider all relevant factors and take a balanced approach. Fast forward to today, and Tesla is still facing some challenges with demand. The company is trying to increase demand at all costs, even if that means cutting prices on their cars. This is the 5th price cut they've done, which may make consumers wonder if they'll keep doing it. There's concern about the weight of this strategy on Tesla's future success. However, the bigger concern might be Tesla's valuation. The company is trading at 42 times next year's earnings, which is much higher than Ford or GM. This means Tesla is expensive and may need to become closer to these companies in terms of valuation. It's also worth wondering how many vehicles Ford and GM will sell in 2030 compared to Tesla. A lot of people are bullish on Tesla's future success. They think Tesla could sell 10 times more vehicles in 2030 than in 2022, which is a huge growth opportunity. Are you one of those bullish people? What do you think about these developments? Let us know in the comments section below, and don't forget to give this video a big thumbs up. Also, make sure that you're subscribed to Tesla Hub.